Hello and welcome to yet another edition of Farm Matters. I am Vivian Fernandez. We had taken a break in the run up to the Lok Sabha elections, and now that some of the important state elections are also behind us, we have decided to resume and we are happy to resume. Um, the topic of discussion today is the demand for carbon credits, mainly from agriculture, in the light of the election of a climate change denier as US president, and also in the light of the rather paltry climate finance financing that has been agreed by the developed countries at the just concluded summit in Azerbaijan. India hopes that carbon credits from agriculture will become an important source of income for smallholder farmers. And our guest today is Umang Agarwal, who is head of carbon at Grow Indigo. Umang, welcome to this program.
Thank you, Vivian. Thanks for having me.
Umang, first of all, please tell us about Grow Indigo. You were on this show about 2 years ago when you had just launched the program and you were trying to enroll farmers in Punjab, Haryana, and Western Uttar Pradesh into your carbon credit program. Tell us about your company and also about the progress since we last spoke.
Sure, Vivian. So, Grow Indigo is a sustainable agriculture company. We have two lines of business. The first one is biologicals, wherein we research, we manufacture, and we sell agri inputs, which have originated in biologicals, right? So either microbial based or micronutrients. So these are crop protection, soil nutrition products, which provide an alternative to the chemistry based agri inputs. The second line of business that we have is the carbon program. We have currently India's largest regenerative agriculture carbon program. Four programs as of now listed. So I think, Vivian, when we spoke 2 years back, we were only operating in Haryana and Punjab, but now our programs cover 13 states, and we are active in 6 states out of these 13 states, covering 5 commodities: rice, wheat, maize, sugarcane, and cotton. And as of now, about 2 million acres of farmland has been enrolled in our various programs. So this is about our carbon program. And then third line of business is basically helping food and beverage and apparel companies meet their scope 3 emission reduction targets. We do this by providing sustainable low carbon commodities to these companies.
Okay. Now, before I come to the nitty-gritty of what farmers have to do to earn the carbon credits, I would like to ask you, what do you think is going to be the impact on the voluntary carbon market in which you are going to be active because of the election of Donald Trump, a climate change denier, to the White House, and also, as I mentioned, the rather meager amounts that the developed countries have agreed in terms of climate change financing. Do you think that that is going to reduce the demand for carbon credits and also the value of those carbon credits?
So two different questions, Vivian. On Donald Trump, I'm not familiar enough with US politics, so we'll have to wait and see on that one.
But he has said
Uh,
that he is going to pull the country out of the Paris Agreement, where developed countries had agreed to certain climate change goals, that they would reduce the emissions to ensure that the global temperature would not go beyond 1.5 degrees centigrade. So that is going to be a major setback if he actually pulls the US out of the Paris Agreement.
Yeah, so from a voluntary carbon market perspective, if we see recent developments, such as in the recently concluded COP, we saw a framework being passed, a rule book being passed for strengthening of international carbon markets. So from that perspective, so this COP really, had two major outcomes, right? One is around the carbon market rule book. So and these were long-standing negotiations going on, right? Since the Paris Agreement started in 2015, 2014. Last 8 to 10 years, these negotiations have been going on, which finally concluded on finalizing the rule book for Article 6, which allows for countries to collaborate and meet their climate goals. And the second one was around climate finance, which you brought up. So as of today, the commitment by developed nations to help developing nations meet their climate targets was to the nature of about $100 billion. Now that got to $200 billion, which the developing countries will provide. The developed countries will provide developing nations by 2035. Right now, this is against an ask of about $1.3 trillion that the developing countries had, and therefore, including India, most of the countries have not been very happy with the outcome of $300 billion. Now that said, I think in the larger scheme of things, at least it's a higher commitment. It's threefold what we had until now. So from that perspective, it's in the positive direction.
So, Umang, you mentioned about COP, and for the benefit of our audience, I would like to say that this is short form for Conference on Parties. You also talked about the rule book. What is so important about the rule book? Is the rule book important because because this is going to impact or influence how the carbon credits are assessed, and whether the I mean whether they have a bearing on the integrity of the carbon credits?
Right. So basically, what this Article 6 rulebook does is it facilitates the establishment of an international carbon market. Now, there are two different clauses in it, and a lot of legalese, but Article 6.2 and Article 6.4. So 6.2 talks about if two nations have to come together and collaborate and trade the climate impact. So it allows, it lays a framework for doing that in a in a manner in which quality is maintained, right? And there is no double counting. There is corresponding adjustment of the claims. Uh, what Article 6.4 does is that it allows, it is similar to something previously that we had, was clean development mechanism under the Kyoto Protocol. So now Article 6.4, carbon markets under Paris Agreement, will provide a very robust mechanism for carbon markets to be created internationally. And this will be overseen by the UN climate change body.
Now, after this 2 years of work that you have done in Punjab, Haryana, and elsewhere, have you generated any carbon credits?
So we have generated carbon credit. So from a definition perspective, yes, we have generated, but from an issuance perspective, we are waiting for our first issuance. So our audit is complete. Right now, the it's going through the registry process, and we expect to hear back in the next couple of months. So that's where we are. So from a generation perspective, we have generated quite a bit of climate action.
So you're waiting for the audit, and only after that will you be able to sell these to corporations who want to reduce their carbon footprint.
Correct. So from a so the way process is, there is, you generate the credits and then they have to be audited and verified, and this is a third party audit, and currently this process takes anywhere between 18 to 24 months. So right now we are at the end of that period. So our audit from a third party perspective is done and complete. It's now going through the formalities at the registry level.
So this audit will ensure that the what you call carbon credits that are earned result in real reduction in carbon emissions.
Right. So if you take the quality of carbon credit per se, it has to look at many different angles, right? So from a whether the project is locally grounded, it takes local stakeholder consultations, doesn't negatively impact local communities, right? So those are some of the things that are seen. From a climate perspective, you want to ensure that the project is really additional, right? That is, it would not have been possible without additional finance from the carbon markets. You want to ensure that the baselines are not overstated, right? And it was one of the problems in previous mechanisms that baselines would be overstated, and then you would show that you've reduced the you've reduced greenhouse gases to a larger degree. So baseline has to be very robust. You want to ensure that there is no leakage, right? There is, and the carbon stock that you are fixing in soil is has a certain degree of permanence around it. You want to ensure that there is no double counting of the credits, right? Same credits cannot be claimed in two different registries and two different programs. So those are the things that safeguard the quality of carbon credit.
Can you tell us how do farmers who are enrolled in your program earn the carbon credits?
It's a relatively simple process for the farmer that we've kept, and what we have is a assisted model. As of now, it is not a self-service model, and let me explain what that means. So we have a very good and strong field team. That team goes to the farmers, makes them aware of new practices that have a benefit to the farmer from a yield and soil perspective, but also has a climate impact, right? So it could either reduce methane from rice fields, it could build soil carbon stocks, it could reduce the burning of cotton stalks. So those are the practices that we are looking at. Now, once this awareness and handholding is done, and farmer actually adopts the new practice, again our agent goes to the farmer, collects all the agronomy related data from their field, including geofencing their field. Right now, with once we have the geofence location of that field, we ensure that it's actually a cropland, not converted from a forest land or a different land. Right, it's an actual cropland for a significant period of time. Uh, that they that and that they have actually adopted the practice. Right. So now with our remote sensing algorithms, we are able to tell whether a particular rice field is flooded or not flooded, whether a particular land was tilled or not tilled. Right. So those are the things we are able to chisel apart using technology. So once that happens, this data is processed using a biogeochemical modeling to ultimately give us a number, as in what was the impact, climate impact of that piece of land. Once that is done, a report gets made. That report is audited by a third party, and this audit and registry approval process is what has taken us about a year and a half to 2 years. Uh, so post that, the credits get sold, and farmer receives the payment. Now, I must tell you, we don't charge the farmers upfront anything to enroll in the program. Only thing they have to do is take care of the practice adoption and report the data to Grow Indigo.
You mentioned five commodities that you are active in. What are those five commodities, and how do farmers who grow these commodities reduce their carbon emissions?
Right. So we are active in rice and wheat rotations in the north. So Punjab, Haryana, UP, MP. We are active in cotton areas and sugarcane areas in Maharashtra, Gujarat, MP, and also rice and corn areas in the north, as well as Andhra, Telangana. So those are the areas we are looking at. If you look at rice, it is pretty straightforward. Traditional method is transplanting of rice with flooded rice fields, which leads to a lot of methane emission. Now, the new
And
practice
methane
that
is
we have,
20 times, and methane is 20 times more greenhouse, more earth warming than carbon dioxide
correct,
over a
correct,
short period of time, over about 20
correct,
years or so. Yeah.
correct. So methane is the same gas as we put in our vehicles, CNG. It is 25 times more potent than carbon dioxide at heating the earth. Now, when we move to direct seeding of rice and do not flood the rice fields, it reduces methane by 30 to 50%. And that is the impact that we quantify, and carbon credits get generated. Similarly, when farmers do not till their land, when you do not disturb the soil too much, uh, over time, soil organic carbon builds up. Now, this carbon stock is what we again quantify and report it. So the amount of carbon that is stored in the soil gets converted into carbon credits.
So
So those are the
no-till agriculture is for wheat farmers.
for wheat and also for cotton and sugarcane. Now, in sugarcane, what you also have is it's a ratoon crop, right? So you have a lot of trash that comes out at the time of harvesting. Now that trash conventionally gets burned by the farmers. What we ask the farmers is do not burn the trash, mulch it in the soil itself. So that results in carbon credits for from not burning and managing the crop residues very well. Similarly, in cotton, what we do is promote fertigation. So with fertigation, you are reducing less synthetic nitrogen fertilizers. Now that
What is
reduces
fertigation?
fertigation is basically providing fertilizers with the help of drip irrigation. So you're using water soluble fertilizers. Their nitrogen use efficiency is higher. So what it means is you are reducing a lot of nitrous oxide emissions and nitrous oxide is 300 times more potent than carbon dioxide at hitting the earth.
So by providing fertilizers, water soluble fertilizer through drip irrigation, you apply precise amounts and you prevent the leaching of nitrogen into the soil or the evaporation into the atmosphere.
Correct. So by and large, you reduce the nitrous oxide emissions resulting from synthetic nitrogen fertilizers into the air.
So India is one of the largest producers of rice, and most of our rice cultivation is done in transplanted fields. And in transplanted fields, the flooding is done mainly to suppress the weeds. Now, when you move to direct seeded rice, where the fields are not flooded, weeds are likely to grow. So, how do you ensure weed suppression in direct seeded rice?
Right. So weeds have to be managed, and there is a proper management plan to manage the weeds in DSR. That said, there are also a lot of diseases that the incidence of diseases reduces when you do not flood the rice field. There is improvement in nutrient use efficiency when you do not flood the rice fields. There is with time, if the management is good, there is also improvement in yield when you do not flood the rice field. So there are a lot of co-benefits as well. What you also see from a social spillover perspective, if you see transplant rice, you have mostly women labor standing in the flooded rice fields, bending over and transplanting the rice all day, into a lot of back problems, lot of uterus problems and reproductive health problems. All that goes away when you move to direct seeding of rice. So a lot of human health, women health benefits as well.
So, Umang, in direct seeded rice, when you talk about weed management, are you talking about herbicide resistant rice?
That is one of the new technologies that we are looking at, and we've partnered with a company called Savannah Seeds. So traditionally, if you look at rice in India, rice has not been bred for direct seeding of rice. Right, most of the research has taken place in transplant rice varieties. Uh, the new herbicide tolerant varieties that we have are most suitable and amenable for direct seeding of rice.
So, shall we say that you're mainly banking on avoiding carbon emissions either by not ploughing the fields, as in the case of wheat, or by not flooding the fields, as in the case of rice. So the main emphasis is on carbon emission avoidance rather than carbon emission capture.
It's a hybrid credit that we generate because if you look at Haryana and Punjab, rice is half of the half of the year, right? The other half of the year is wheat. So so with wheat, we are improving soil carbon stock, right? And roughly 60 to 70% of our carbon credit comprises of removal credits. Removal is something in which you are sequestering carbon. And about 30 to 40% of our credit is a reduction credit, meaning coming from reduction of methane or reduction of nitrous oxide.
And the sequestering is happening through agroforestry or what?
Sequestration is happening through crops, like I said, reduced tillage, crop residue management. So there are two different kinds of sequestration we are looking at. One is sequestration of carbon in the soil, uh, that we spoke about, and the second is, of course, with agroforestry, in which sequestration is in the above ground biomass, timber, basically. That
So, how much of carbon dioxide equivalent do you expect to remove in 1 acre?
So it depends from which geography in India we are talking about and which cropping system we are talking about. But the ballpark figure as of now, we are somewhere between 0.5 to 1, depending on how many practices the farmer is adopting. And in the next 3 years, this effect size will improve to between 1 and 3, is what we can say. Now, this depends on what geography the field is in, what crop rotations and practices that the farmer follows, and what are uncertainties with the models are.
Mhm. Now, what is the kind of value that the farmers can expect? What is the kind of price that they can expect? But what we have seen is that in the voluntary carbon markets, Indian carbon credits, which are mainly generated from renewable energy, the value has been much lower than the carbon credits fetched by other countries. And that is because there is some issue with regard to the trust, of these carbon credits. So, what is the kind of value that you expect?
Right. So you're right. With some of the older methodologies, and by older I mean they are almost a decade or 2 decade older methodologies. If you look at that and compare them to the methodologies that have come out in the 2020s, in the last 5 years, there's a drastic difference, because the whole understanding of carbon markets has improved. The checks and balances, how do you do the baseline, how do you do the additionality assessment, because additionality is a very tricky thing, right? How do you know the counterfactual which is not there, right? So additionality says that, will this product would this project take place if climate finance wasn't there, right? So you're evaluating it against a counterfactual which is not there. So it's a really tricky and difficult task. uh, if you look at methodologies that have come out in 2020s, they are much more robust. They lay very good and clear guidelines on how do you make a high quality project. So with that said, old methodologies earning a lesser credit price, it's not surprising. At the same time, if you look at agriculture carbon projects, there is no benchmark that we have from India, but with a similar methodology used outside India, what we have seen is the credit price ranging from $30 to $50 in the last 2 years,
$30 to $50 per carbon credit.
per carbon credit, right? So 30 was
And
basically
one and one carbon credit would be equal to 1 ton of carbon dioxide equivalent captured.
correct. So one carbon credit is 1 ton of carbon dioxide equivalent, and 30 was 3 years back. Today it is closer to $50 of credit price that the market is seeing.
Mhm. Now, how do you ensure the integrity? Do you have any credit rating agencies that certify the integrity of these carbon credits?
Correct. So precisely because of the reasons that you mentioned, Vivian, the older methodologies were not robust enough. And again, it comes down to all these 4 5 things: additionality, baseline, no double counting, leakage, permanence, and of course, no harm to local communities. Now, assessing these with older methodologies was tricky. So a lot of rating agencies have come now into picture. What these rating agencies do is apply the latest standards and guidelines and evaluate the projects to ensure and in a way de-risk the buyers, that the credits that they are purchasing are coming from projects that are high quality and have a good integrity.
And these carbon credit rating agencies are not paid by you, because if you look at the credit rating agencies in the bond market, they're paid by the bond issuers, and there's always a conflict of interest. How do you make sure that in this case there's no conflict?
Correct. So So credit rating agencies are not paid by the project developers. They get paid by the buyers, or there could be different revenue models, but they're not paid by project developers to rate our projects.
And one final question, Umang. You mentioned about the reduction of drudgery, the kind of collateral benefits that accrue. Now, let's suppose you meet some of the sustainable development goals of the United Nations. For example, reduction of drudgery, women's empowerment, improvement of health. Will that enhance the value of the carbon credits?
Correct. So the more sustainable development goals we are able to take, and the more quantified impact we are able to provide in the report, the more the more premium it results in from a carbon credit perspective.
All right, and I wish you all the best, Umang. Thank you very much for joining us.